and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the
I'll be on in a
trading
second.
bell.
I'm
My
just gonna
heart
go
starts
to
to pound. Daily stock pick trading podcast
the-
in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room.
Ooh, sweet. I thought I was going to get screwed up here. Morning, Scott. I thought the camera was going to get screwed up because that's what I was dealing with. The camera seemed to, the software for the camera froze up. Let me make sure I'm tracking. I have to make sure the tracking, auto tracking, tracking speed, fast. Okay. It tracks it. Sweet. Let me go over here because I'm guiding you through hopes and fears. No, I don't want that. We're going to go over there. Oh, sweet. I got an ad. Skip. Then I got to get that down. Okay. The camera's on. We're going to start. I got a lot to go over today. Why gold is beating the S&P. I still love Citi. And the reason I love Citi, Scott, it's a love-hate relationship. So here's Citi. And part of the reason is Mike Mayo, who I think is Bank of America and Wells Fargo's, he's one of the big banks analysts for financials. And he said, hey, Citi is one of the best. Now, their profitability sucks. Their growth, great. I mean, growth in the banking sector, fantastic. Their valuation, it's good. Momentum, that's where you get boggled down. You look at this versus the S&P. The S&P is up 28% 3 years. This is down 11%. But then you look at 1 year, and Citi's up 52% versus the S&P 32%. Year to date, up 21%. S&P's up 19%. And you go over to FinViz and you look at, I don't know if they have book value here. Let me see if they have book value. Interest on loans, revenue. I think that's the financials. So I don't think it's going to say book value. There's not a way for me to look up book value, I don't think. Earnings estimates, dividends, valuation. Price to book, there it is, 0.62. Okay, 62. Sector median is 1.21. So they're trading at 62% book value. Most, whenever you get under book value on a bank, that I grew up being pounded into this by people who loved banks. And what's their book value? I think it's 99. Let me see. Book value $99, and they're trading at 62. But there's a lot of systemic problems. So it's not like they're going to be taken over by somebody. Not like Lena Khan's going to allow that one to go through. So, Michael Dell sold $978 million worth, almost $1 billion worth of stock on September 20th. But yeah, okay, let's look. I still do like Citi, but it's underperformed, I think, from other financials. So, Pan W, Costco, cost. Let's look at my brokerage holdings. Pan W is the only one. Let's look at Bitcoin and crypto. Nothing. Let's look at covered call ETFs. Nothing. Let's look at energy names. Sunoco and Albemarle. Yeah, I mean, from a chart perspective, I haven't looked at it in a while, but I still think it's when Mike Mayo says, "Hey, it's the best opportunity," I kind of listen to him and say, and he makes all good points. That's where, hey, you don't want to listen to a douche on the internet about stuff. But when there's an expert and you can look it up and the facts warrant exactly what he's saying, yeah, I mean, that at that point it's like, well, why don't I own this? And full disclosure, I don't own it. And I don't know why I should. Okay, why is this? They put in a bunch of new scans. Huh. IBM and McDonald's. Let me make sure my keyboard's at 100%. Yeah, both of them are at 100%. NASDAQ. Oh, look at that. Wow. They put in a bunch of new scans, it looks like. Kellogg's Dr. Pepper, Keurig Dr. Pepper, KDP, Costco, Pan W. Now let's look up the S&P. Wow, they really did. They put in a ton of new scans. Wow. Lockheed Martin, Southern Company, and RTX. Voila. Okay, let's go back to the strategy tester, and we'll go back to Citi. Honestly, probably Citi should be in the core portfolio. It's one of those that Bank of America is just the big boy, and I don't like JP Morgan just for ethical purposes, and that's why it's not in the core portfolio. The core portfolio would be doing better with JP Morgan in it, but ethically, I just don't want to put it in there. So if you bought in at 58, algorithm makes you 51%. So you can't argue with the algorithm back testing at a pretty good rate, 51% over 2 years instead of 31% when you buy and hold. The RSI looks a little bit extended. MACD just kind of coming up. If we take a look at the weekly on this one, MACD still going down. Looks like you got about a golden cross. So I would say if that $80 is going to get done, and we see financials with rates being reduced, I'd say Citi's probably a pretty good bet to buy and hold with that golden cross. Although you take a look, the golden cross happened here. It traded sideways, and then it just dipped down. But that was rising rates. I mean, that's rising rates. So, and then you had the banking, like credit issues, and with the lower end customers, and there's some big moves. Occidental Petroleum up almost 2%. Yeah. Let's see. We have some new ones put into a watch list. Brian was nice enough to put together some new ones for a watch list. We're gonna look at some of these income ETFs like JEPQ, JEPI, Carnival Cruise Lines for Jeremy. Cade wants me to look at a app 11. I thought this was good. This is from New Trader U. Why do I have this so white? Oh God. I thought this was good from Steve. The Stock Picks app. This is interesting. It's an app. They came to me and I want to hit pause. Why am I not getting a pause? Oh. Well, that's whacked. Okay. There we go. I'll keep it up there. Why not? Then we're going to go to Earnings Hub. Because we have Micron tomorrow, and then Costco. And KB Homes, I think, reports today. Yeah. KB today. Let's just see. KBH, I think. Yeah, KBH. IBIT options. Morning, Mark. This is a watershed moment. I like this theory. He thinks options are going to go up. Motley Fool says buy Wingstop. So we're going to take a look at that. Snap is tapping Google for their glasses. Just morning, Joe. I always seem to buy Snapchat after their earnings, and I've been rewarded fairly well on this one, and just sell it. And it's not, we're talking one or two shares. Kathy Woods buys PayPal. Will that work out well? Devin, this is interesting in that it's overweight quality stocks with positive earnings per share revisions. Devon's in this one. There's a couple of other ones, but I thought Devon was an interesting one because that one's been beaten down. Supermicro's target. Oh, I should bring up, we're going to bring up Lilly before. Lilly, Alzheimer therapy approved in Japan. Supermicro, their price target was slashed, but it's from 1,500 to 1,000. That's what's, slashed at loose cap. Sounds horrible. The price target's, 100% of where it is today. Still, I mean, that's what's crazy. Snowflake is diluting shareholders. I had a discussion with my Fidelity advisor. You know what? Let me see. Fidelity.com. Let me look at, can I get to, I don't think, it's not going to log me in. News and research, ETFs. We're going to go over here. And we're going to look at Screener tools. Oh, it's locked. I have to log in to do it. I'll make mention that I'm going to use this. Okay. Trendspider composite charts. Don't overlook that. U.S. Dow Jones is saying, or Department of Justice saying that they are investigating Visa over credit card market. Nancy Pelosi bought in this. This is another feature of Trendspider that you can find out when Pelosi is trading. Some of the additional custom indicators. This is what's interesting, the squeeze indicator. There's a ton of these things in Trendspider. Costco on the 4-hour, we'll talk about that. CNN, Fear and Greed Index. We are at greed. GLD for long term. So this was an interesting one. What? No, why did I put glad? It's GLD. Ugh. But oh well. People should know what I was talking about. Should be able to read my mind. It looks like a pretty decent day. I don't know what happened at 8:30. Was there news at 8:30? John Cena speaks for Meta. IPOX, China stocks soar. No vote for Boeing. Final offer. Debit card monopoly. Morning movers. Yeah. Nothing really on the, but okay. Oh, I hope nothing F's up. Why do I have, I should, There we go. I have to redo this damn thing. Okay, I guess that's me in the middle. I like moving and just making it seem like I have a cameraman. I may do a talking head video one time of where I walk around with the web camera hooked up, because I think I can hook it up to my iPad as the web camera. Maybe standing in the living room, conducting everything. Let's see. Am I on Do Not Disturb? I got to put myself on Do Not Disturb. Focus. Do Not Disturb. There we go. Now I'm on Do Not Disturb. I want to go down the watch list, but it's too many stocks. Oh. We got NVIDIA kind of hanging flat. Market data. We'll look at that, okay. Okay, I'm going to hit record now. I don't know what this show's going to be like. Yesterday was a really good show. Yesterday was a fantastic, fantastic podcast. You can get to it here. I thought it was great. I mean, I honestly, I thought that was the best podcast I've done. Nobody made mention how bad it was, but a lot of people said how good it was. But Not that it was the best. I thought it was the best, but KAVL. What the hell is KAVL? It's down 2%. James, why do you like KAVL? Other than you bought it and you want to see it go up. Other than talking your own book, you saw it and you wanted to go up. Other than that, why do you like it? Because it's not the stock price. It's down 94% over 1 year. Let's see. Friday the 21st, they announced a $6 million offering, so they diluted shareholders. It was up 133% yesterday. It's down 1.48% today. If I were trading this one, I would trade it on a 5-minute or maybe even a 65-minute algorithm. Let's see how the 65-minute works. 65 minutes still loses you a bunch of money. But it got you in, right? At $1.68, you're at $1.31. You got a gap. Where is the news? Send me a link. Because honestly, on Seeking Alpha, there's nothing. I mean, there is literally nothing. Innovations, SEC quarterly report, the 10Q. I mean, and that doesn't, nobody covers this. So there's no covering of it. It's got a, okay, here's the thing, James. This has a $9 million market cap. Yeah. Again, if you have a momentum stock, trade it. But this has a $9 million, yeah, it's a trade. $9 million. Think about it. $9 million. I have more in my bank account than the market cap of this company. I could literally go out and buy this company. I could buy every share and buy this company. When we look at the financials, revenues, $10 million. Selling, general, administration, and expenses, $9.4 million. Interest expense, 1.1. Net income, 7.6. They're losing money. So I think the merger's great. But this is a trade. I mean, this if there's anything about it, it's a 100% a trade. And for me, there is no algorithm that I could implore. Let's see the 5-minute. The 5-minute, I hate the exit, love the entry. So here, this was a great one. At $1.25 yesterday. What was the high yesterday? Let's see. KVL. Yesterday's $1.95 was the high. So look at how that 5-minute got you in there. Well, no, it's got you in it. It gets you out with a 6% gain today. Just got you out on the last candle with a 6% gain. Now, yesterday, it got you in Friday at 64 cents. Got you out with a 107% gain. So, $266 might have been the intraday. Might have included after hours or something. But with a stock like this, that after hours, good luck in getting this one filled with a brokerage after hours. It's got no, you have almost zero, shares out there. So, it traded 1.8 million shares. Let me see. I know how to look this up on. Book value, book per share, $2. There's nobody that covers this. Nobody. Market cap 9 million. Shares outstanding. Yeah, you're trading almost 50%. yesterday alone. Double bottom right there. There's nothing that makes me want to get into this one. You can trade it. I'm not against you guys making money by trading. I'm just saying, hey, this one, it's not a buy and hold. I don't care if there's merger rumors. I don't care about that stuff. Trade it. Get your 50%. Get your 10%. No, there's no link in here for some reason. Maybe it's just YouTube doesn't let you put links in. But I'm sure the news is out there at somewhere. But it's a trade. Honestly, God, it's just a trade. That's all it is. But kudos on finding it. Again, if James, here's my suggestion, okay? Don't pay for Ross's course, The Warrior Trading, because he's got a lot out there for free. But understand momentum trading. If you're going to trade things like that, understand momentum trading on the charts, because there is nothing fundamentally or nothing news-wise that would make you think I'm going to buy this one and hold this for 12 to 24 months. So in my mind, that's a trade. And so if you understand candles, if you understand moving averages, if you understand MACD, if you understand RSI, if you understand momentum trading, like Ross teaches it, and chart patterns, you can make a lot of money with that. Yeah, I think you're perfectly fine doing that. But that's not my wheelhouse. I've traded like that in the past, but in order to get to a 7-8 figure portfolio, that won't get you there. Ross's performance is not typical. And he says that at the beginning of every video. My performance is not typical, and it's not. More people blow up their accounts than actually do that. He doesn't trade options. He just does momentum. He does do margin. So he is taking margin on stuff. But yeah, in my mind, again, the Savvy Trader Core portfolio, this one right here with 35 names, this you could have made your entire year. Year to date, this one's up, let's see, 32%. The NASDAQ's up 17%. And you might say, oh, SPY's up more. Well, SPY's up 19%. This one's up 32%. So that would be the way that I would build a portfolio versus, trying to do that. Yeah, that's the, it's like trading biopharma. There are, of the S&P 500, you could find, I'm not the S&P 500, but of the Russell 1000, you could find probably 700 biopharma stuff. What's PSEC? Prospect Capital. What do these guys do? Business development company, middle market, mature mezzanine finance, later stage emerging growth. The annual revenue doesn't look good to me. Valuation looks good. Let's see what the value. It's 5.2 PE versus 12. Let's see their growth. Growth sucks. I mean, for a capital corporation, growing revenues 1%. Kind of looks bad. Now, 100% gross profit margin, I call into question that because every business has, stuff. Wall Street says it's a strong sell, but there's one analyst that covers it. So I don't like this one. Again, it's not in my wheelhouse. And that's the good thing about the stock market. I could be completely wrong. That could be a $10 stock tomorrow. The stock market, for someone saying absolutely not, do not buy that one, do not sell it. Stock market it teaches you over time and humbles you in a large sense. Yeah, dividend doesn't matter if the stock price goes down. Let's see, PSEC. Let's go to FinViz, because I can almost guarantee you're not paying for tools if you're buying those kind of stocks. So let's use Finbin. $2 billion market cap, 13% dividend. If you've got a company that is paying a 13% dividend, but isn't growing, where are they getting the money from? This is just a 1-year chart. This is 1 year. If you bought at this at $6 and you dip down to $4, what does a 13% dividend matter to you? Because you're losing the actual capital. And again, this is like a REIT in a sense. It's a financial asset manager. But it's very much like a REIT. And I hate REITs because they pay out their dividend. Now, a good REIT is Simon Property Group. This one, 5% dividend, 4.76. But look at that stock chart, bottom left, upper right. So, okay, I'm going to do the podcast now, James. I'm done with the small cap crap. And I say small crap. I'm just not a big believer in small caps because I think, it takes a certain investor to pick out small caps and do analysis on small caps. And I'm not that guy. I'm just not that guy. I've made my money in big tech. So that's it. Boom, boom, boom. Okay. Let me do the podcast. I'm going to hit record. Good morning. It's Gary. Tuesday, September 24th. I hope you're having a good Tuesday. I kind of said it yesterday that I didn't think anything was going to go on. I do think that we start to see a little bit of a downturn, but I'm just not sure. The market's not giving you a lot of information. We're going to go over gold. We're going to go over the CNN Fear and Greed Index. I got an alert for Costco to buy. I still don't own it. Is there a breakout trend on Tesla? Some political stuff with Visa because Nancy Pelosi sold Visa. I had a discussion with my Fidelity advisor yesterday about utilities, finding that. SMCI, Snowflake, Eli Lilly, Devon, PayPal, a Motley Fool. They say strong buy on this one. I'll give you my opinion on Motley Fool. Snapchat's up, earnings, and some IBIT stuff, some Bitcoin stuff. But we're going to start out with the Qs. So we're midway. You're at 477. You're in pre-market, you're at 484. I've said the range is between 500 and 450. That's where we've been trading. Anywhere you get closer to 450, you can buy it. If you think this is the start of a breakout, you can go buy it. Yesterday in the newsletter, I posted, and I thought yesterday was probably one of the, if you're brand new to investing or if you're just like a rookie, I thought yesterday's podcast was one that you should just bookmark. But we went over what the S&P end of year from all the banks, and it's posted right there. Okay, S&P isn't expected to get over on average about 5,600. Okay, so where are you on SPY? And that's going to be a good indication of where we're going unless something breaks out. You're at 569. At 5,600, that's down. So you're going to use this probably 565, 560 as a support level. So if we are going to have an end of year rally, in my mind, I think that means you've got to pull back. And so I'm just staying patient. I could be completely wrong. That's how I'm viewing things. Today, it looks like the market's taken off. Now, I've said it before that gold could be a long-term asset. Here's a growth of $100 by asset class from 1970 to 2023. This year, gold is up. But over time, growth of $100, the S&P, if you put $100 in 1970 and just left it, it's worth $22,000 today. Corporate bonds, they're worth $7,000 today. Gold is worth $5,000 today. Look at that gap. So if you can't pick stocks, don't throw your money in gold. Gold is a safety. Okay, I think Bitcoin's going to do similar things to this, to the S&P. I think Bitcoin with blockchain is going to do similar things. Don't take 5% and put it in gold. Take 5% and put it into crypto. Okay, I don't want to see you after 33 years have $5,000. I want to see you have $22,000. So when I talk about, having some patience, where are we on the CNN Fear and Greed Index? We're back at greed. Just a few weeks ago, we were down here at fear. We weren't at extreme fear, but we were down here at fear. We're back at greed. And look at the chart. The chart has come up. We got this nice top here at 565. That needs to turn to support. It still isn't support. It's still resistance. We haven't seen a retest of it. Okay, so 565 in my mind is the resistance. And with the CNN Fear and Greed Index at greed, I want to be a little patient. There's nothing wrong with putting money into the market for 30 years right now. I think you'll be fine. But if you're in the short term, remember, I'm 90% invested. 90% of my money is in the stock market. It's the 5% that I'm looking to put to work. I have some cash on the sidelines. You always want to have some dry powder for the short term, because if we do see a 10, 20% pullback, I want to put that money to work. Okay? I got an alert yesterday on Costco. And yes, in Trendspider, you can set up alerts. I have it right behind my head, a Costco alert, okay, for a buy. It got a buy yesterday at 971. Okay, they report on Thursday. We're going to go into earnings right now. Every time that they report earnings and they say something wrong, okay, they pull back. Look at that. Look at this way back in March. They went from 760 down to 715. Okay, they went all the way down to 713 where the algorithm got you in. That was a buy. By the next earnings, they were up to 817. Okay, then at that earnings, they pulled back after the earnings down to 788. Okay, at its peak here, you're at 917 before they report now. It's just a simple strategy of during earnings, I'm going to buy it back. I'm going to buy it back. Did I buy during this time when it was 816? No. I need to buy it back higher. It's not a fun point to do, but I need to buy it back higher. Now, when we go and look at Costco, we can go and look at Costco. It's expensive. It is incredibly expensive. Look at the valuation of it. You're paying 57 times future earnings. What I want to show you is that if we just select the metrics and we're going to go to valuation and we're going to do PE. Okay, we're going to do the trailing 12 months PE, and we're going to do update chart, and we're going to remove the S&P. And if we just look at 3 years, okay, it's as high as it's been. The valuation needs to come down a little bit. Look at the 5-year. It's as high as it's ever been. I would argue that it's not necessarily a retailer because it's a membership. It's a membership program. And so that's what Costco is. I am going to buy it. When we look at the summary of it, the quant has it as a hold, and it's the valuation, and it's the growth. Wall Street has chased this price up. They are at $8.97. Get ready, because when they announce earnings, you're going to see this one with price targets in the 900s. Go to a Costco on a weekend, okay? But again, on a pullback, I'm planning on buying. I'm not buying on the alert at 917, even though the original one got you down here at 813 and you're still in that. You've had several triggers of the algorithm on a buy here. You can see it just keeps getting you in, and you've been doing fine. The algorithm makes you 41%. Buying and holding this one over 24 months makes you 83%. It's 24 positions, so once per month. Your average win, 8.24. If you can't sleep at night, this type of alert with the 4-hour algorithm is for you, of when to buy and when to sell. I sold when it told me to get out here at 850. I sold at 850. I had a chance to buy it again at 815. The valuation scared me off. It always seems to scare me off, but I was wrong. I should have bought back at that 815. I'd have a nice big gain again. One of the things that I am happy about, that I am super happy about, is that Costco, if you go and look at QQQ, which I hold a bunch of, okay? Costco is what? The number 7 holding? Right down there? So I still have exposure to it. I'm not completely out of it. I still have exposure to it. Its biggest ETF is XLP. I don't own XLP. So, let's talk about Tesla. and some of these Trendspider indicators. This is called the squeeze indicator, okay? When it squeezes here, it triggers a fire. And it says, okay, you should buy here. Q2 quad witching, it squeeze triggered. And the stock price went up, okay? Q3 quad witching, the squeeze triggered. Are we going to go up? 238. You can set up alerts for this in Trendspider. Okay, you can use that. I don't use it. There are so many things in Trendspider that I don't use. Trendspider is super, super powerful. I use the 4-hour algorithm in Tesla, okay? It got you in here at about 213. You're at 250. You have confirmation. You're trading on the upper end of the Bollinger Bands. I've said be careful of that 260 level. But the algorithm over 2 years makes you 164%. If you bought and held Tesla for the last 2 years, you're down 17%. Okay? The algorithm has 23 positions. If you're if you're just buying and holding Tesla, you're down 17% over 2 years. Trade it. Trade it. This is a super volatile stock. And again, you can trade it and you can backtest on this squeeze during the Q2 witching and Q2. You can set all this up. Okay? You can do all of that. When we go and we look at a weekly chart of Tesla, we can see it's just sitting right at that 200-day. And it's been sitting at that 200-day and going up and down all the way since February 2023. So you want to trade this one. I would argue that you want to trade it. Now, when we get 260 as a support level, maybe that's when you start trading in this range. But there are so many things in Trendspider that are available to you. One other one are political trades. It was breaking yesterday. DOJ plans to open up a lawsuit on Visa. And you can see, here's the article that officially says it. This isn't just Twitter nonsense. But Pelosi sold $1 million of Visa just 2 months ago. You can see all of those political trades here in Trendspider. Okay, you can set that up. You can set it up for an alert. Trendspider is so good. It's so deep. And if you want Trendspider, you can get my 4-hour algorithm. It's exclusive to me. This is something I offer when you sign up through me. Use the link tree, linktr.ee/daily stock pick, that top link. You sign up. Okay, it's $53 a month. Trendspider is a charting program with so much more. Another thing in Trendspider are composite charts. Okay, they took the daily bull flag breakout of the Mag 7. This is all Mag 7 stocks, the chart on all Mag 7s, okay? We're seeing a breakout of a bull flag. What does that mean? Well, maybe you want to go to the watch list here, and we're going to go to our leveraged ETF watch list, okay? I know it's I think it's MAGQ inverse. No, we want MAGS. MAGS. This is the ETF that tracks the Mag 7. MAGS. Now, if you want a triple levered or 2 times levered, it's MAGX. Okay? The algorithm got you in here at 30, just September 11th. I'm not going to make, I was going to make it September 11th. It's inappropriate to make it, no. September 11th. $30. Right now you're at 36. 20% move. It's fantastic. Absolutely fantastic. So again, a composite chart with Trendspider shows you, hey, it's a bull flag. It's an interesting one. Again, Trendspider has all of this stuff, and I provide you the watch lists. I provide you the scanners that I'll do. I'll show you all the scanners that I have. Everything that I provide to you, it's perfectly available to you, so you can do your own podcast. I had a discussion with my Fidelity advisor. Yes, I am a Fidelity client. And we were talking about stuff, and I have an advisor. I mean, here's the thing, and if there's one thing you take away from this podcast and you're listening, get an advisor. This isn't a high net worth thing for me. Okay, I've had an advisor with Fidelity since I had like $50,000 in there. I probably could have gotten it at $10,000. They don't charge you. There is nothing that they do. And their financial fiduciary duty to tell you when they recommend Fidelity specific ETFs. They're not going to lead you into something. And if you're listening to this podcast, you could probably even call BS on them if they start selling you crap. But get an advisor. I don't care if you're with Schwab. I don't care if you're with JP Morgan. Have an advisor. Have a quarterly meeting with the advisor. Make sure he is, having your best interest at heart. They don't make trades for you. They are just there as a resource, and Fidelity provides those for free. If you want a referral to Fidelity, just email me. Again, you go to the link tree, and my email's up in the upper right. Just email me. But my advisor, it was funny because I've always talked about this, and when I take a look at let's look at the market data. When I take a look at this and I look at the year to date, okay, of the U.S. equity sectors here on Seeking Alpha, Fidelity has something similar to this kind of page. So you don't have to have, I'm just used to looking at it in Seeking Alpha. And when I look at this, utilities is the number one. He brought up utilities yesterday and he said, hey, he said XLU might not be the best utility sector for you. There might be better. And he suggested I look at the ETF screener tool. So if you go up to news and research, they have an ETF screener tool. Now, I'm not going to log in. I'm not going to do boring stuff on you, but I'm going to do some research into XLU and some utility sectors. He was also bringing up some bond funds for me that could provide some long end bond exposure that might be managed, managed ETFs that might be better. And so, again, you want to have those discussions. You can listen to this podcast all you want. The absorption process is fine, but make sure you're managing your own money because I ain't managing your money. I have zero interest in doing that. I will never manage your money. So, make sure that you have that advisor. That's just kind of the one thing you need to take away from that. Now, let's talk about the biggest movers of the day. Biggest loser is Snowflake, down 3%. They're diluting. They need money. We talk about these companies that need money. I think it was about a year ago. I took Snowflake out of the core portfolio and I put Palantir in, and it was the right move. Now, a lot of you may have gotten into Snowflake thinking it's a $200 stock because I said it's a $200 stock. If we take a look at this weekly chart where I've got a nice channel drawn, we can see we've just lost confirmation and it hasn't regained confirmation. You might say, well, what's confirmation? Well, if you go back to the newsletter, I have a full video course on confirmation. You can watch it right there. What is confirmation in the stock chart? You can go watch it. We lost confirmation. Okay, you started getting your 200-day. Your 200-day is negative. Your 50-day is negative. You're trading on the downside of the Bollinger Bands. You're oversold. Your RSI is at 36. This one is down at 112. Do you want to buy it here? Well, let's take a look at Snowflake, okay? Because Snowflake is one of those that's really super difficult to say because their growth is so good. But their PE is 187 going forward. That is expensive. That is super expensive. Palantir, just so you know, their PE is 108. That's super expensive. That's super, super expensive. But Snowflake is just expensive. And when you are taking money out of a business, they're doing bonds or issuing some bonds, they're basically saying we need more money to grow. And why? Because they're not making money. And that's the problem. When you look at the valuation, they are making money, but they're not growing their free cash flow. Levered free cash flow is 35%. That's not big enough for a company that needs to grow it by 100%. We can look at Palantir. Palantir, their levered free cash flow, they're growing by 24%. I would say the momentum is the biggest factor in Palantir versus Snowflake. But all of that is super, super expensive. Runners run and you want to add to them, but at a certain time, and we'll talk about this in a little bit, at a certain point, you want to start taking money off the table. Now, Supermicro. Let's talk about taking money off the table. Supermicro, here's a headline. Supermicro's price target slashed at Loop Capital on margin issues. Margin issues were the issue. Make no mistake. Company works to get gross operating margin back to 14% and deals with its 10K situation. That's what Loop Capital is saying. Now, that target slashed, you might think, God, it's trading at 400. What'd they slash it to? Like 200 or something? They slashed it from $1,500 to $1,000. That's their price target. I don't know that that's right. I don't, nobody knows. We don't know what's going on with the financials of this. So in my mind, I've said this before. I am playing with 100% profit in this one. I have made all of the money that I have invested in SMCI. It is 100% profit. The trend line is straight down. We do have a gap up here to 539. That seems to be pretty juicy. The 50-day is negative. The 200-day is negative. You're coming up on this 10-for-1 stock split. They got a letter from the NASDAQ about delisting them again. That was the problem that they had before when they didn't issue the updated 10K. They got another letter. There are major, major issues with one. Am I getting into this? No. Am I getting out? No. When you slash your price target from 1,500 to 1,000 and I'm sitting at 500 and it's all profits, I'll just let it lie. I'm going to forget about it. I have cash on the sidelines. I don't need the cash. If I need the cash, this one might be one that I sell. So SMCI, just beware of those headlines. Eli Lilly, Alzheimer's therapy. Eli Lilly, remember, we're in a GLP-1 and an AI market. Eli Lilly has something that the other GLP-1 drug makers don't. They have an Alzheimer's drug, and it just got approved in Japan. So Eli Lilly is one that I say, buy it under 900. Let's see where it is right now. We're going to type in Eli Lilly. LLY is the symbol. We're going to go up here to core investments. Okay, why is Trendspider doing this to me? Trendspider, we're going to log out and log back in. I think I have to restart Safari, to be honest. And they hate that I use Safari, by the way. They want me to use Chrome. Every time I talk to them, they're like, please use Chrome. Please use Chrome. Okay. Here's Eli Lilly. We're trading at 920. Get it under 900. Even though the algorithm got you in at 930, I would say you wait for it to go under 900. Now, if you're just going to buy 2 shares of Eli Lilly, it's $40. Just buy it. Buy it for the long term. This is a company, it is overpriced. You're paying for the growth. You're paying for, you stub your toe, you're going to get a GLP-1. You forget about your grocery list. You're going to get a GLP-1 or the Alzheimer's drug because you now have Alzheimer's. That's what it's going to do. Now, you want some other stocks with positive earnings per share revisions? Morgan Stanley just released a list. What I found interesting is Devon Energy. Okay? There's Cheniere Energy. There's a bunch. You can read this article from the newsletter. I found Devon Energy to be interesting. And the reason is the valuation isn't crazy. The PE 7, the growth is pretty good. It's not horrible. The profitability is an A because they're making 54% gross profit margin. The sector's at 44%. Now, what sucks is the momentum. This is where Palantir and others actually thrive. If your momentum is the hardest thing in a market to actually cut. But I've said it before. Devon Energy, I think, is a $50 stock. Now, I'm always proven wrong on these things. Right now, your 50 days moving down. Your 200 days moving down. I sold out at about 45. Okay, I think my average purchase price was around 42 or something. I sold out at 45. Algorithm got you in here at $40.35. If we go and look at Devon, what does Wall Street say? The average price target says it's 54. Okay, they've chased this one down. They had a price target of $80 on this one just in October 2022. $80. And they've cut that almost in half, and they just keep bringing it down. Now, if you say you don't like Devon Energy because you want a stock that's bottom left to upper right, well, let's go look at the energy top oil and gas production stocks. SM Energy, we can do this by market cap, okay? We're going to look. ConocoPhillips has a 4, okay? A 4 out of 5. It's a buy. The valuation, not crazy. Growth, good. Profitability, okay. Momentum's better. It's again beaten down. What's the average Wall Street price of ConocoPhillips? 136. That's a 23% upside. So you take that article, you look at those undervalued stocks, you can find others, do your research. Now, is this the kiss of death? Kathy Woods invested in PayPal. Is this the kiss of death? She bought it. She bought it in the ARK F fund. And it's been in there, but she just doubled down. PayPal has been one that I got out of at around 60. I didn't think it was breaking this. When we look at a long-term chart of this, you're seeing the breakout up here at 76. You might see some resistance until this holds this 76. Right now in pre-market trading, market opened, you're at 77. It's almost 78. Okay, it's up, let's see, it's up 0.35%. Now, if you break through here, where might the next move be? The next move might be right here. If we just put a line at 88 right there, you can see we hit it. We used it for a breakout here, and then it came up. It didn't necessarily hold it. See how it broke through there? It didn't hold it and then retest it and go back up. It kept going down. Oh, and then here in January 2023, it tested it at 88 again. So if it turns out that you come back and you retest 76, then you're trading between 76 and 88. That's your range. Right now, you're in an overbought territory. 68 is the RSI. MACD's not super extended. The 4-hour loses you 21%. You lose 17% if you just buy and hold. I don't trust the 4-hour on this one. But you can see until we test that 76, this one still remains a resistance. So it's interesting. I don't know if that's the kiss of death, blah, blah, blah. Let's talk about Snap. Because I saw this article, Snap taps Google Gemini for Snapchat's chatbot. What's interesting is Apple tapped Google to train their AI model. And now Snap is tapping Google Gemini for Snapchat's chatbot. I thought it's interesting. I will tell you, in my Webull account, I always seem to buy on the earnings drop. I buy a couple of shares of Snapchat. And it cost me like $20. 10, $20. That strategy has worked out pretty well because when you look at this one, when you look at the earnings, okay, we ran up into this earnings right here. And it's just been the last couple. February, we dropped down, okay? That I bought a bunch there. Then on this earnings in April, I think we dropped down right after the earnings or right before. I bought a little there. We're up here at 16. Then on this earnings, we dropped down. I bought a couple there. I'm up on this one. So I think I own a total of maybe 7 shares of Snapchat. It's not a lot. It's in my Webull account. This is the account that I just basically bet on. It's my sports betting account. You can join Webull, get some free stocks there. But Snapchat's one that I do. I like that one. It's just every now and then I buy it. Now, in the my dad is a member of Motley Fool. And part of the reason I don't do Motley Fool is exactly the article that he sent me yesterday. And I will include a little snippet of what they sent me. It is for people who are less educated than the ones who actually listen to this podcast. It is for the people who want just a summary of what it is. And it's not even, I promote Alpha Picks. Yesterday, we went over a couple of Alpha Picks. If you want to hear that, go to the yesterday's podcast. But we promoted Alpha Picks. The reason I promote Alpha Picks is because of the portfolio stuff. And they give you 2 in-depth data-driven stocks every month. Motley Fool said yesterday, you should buy Wingstop. And they said Wingstop has been just on a tear. Well, I don't know where on a tear is, but it's reached this like $300 level, $400 level, and it just keeps pulling back. When you look at this 4-hour, over the last 2 years, the algorithm makes you 100%. Buying and holding makes you 215%. They're recommending it now. Why are they recommending it at 427? They never said. Okay, they said what could go wrong. The price could be too spicy. Here's the exact article. Like its hottest atomic sauce, there's a kick to stock's valuation. Wingstop has never been cheap by most conventional measuring sticks. And after its more than doubling over the past year, the stock could suffer if momentum investors start heading for the exits. Wingstop is trading at earnings multiple north of a 100. It's fetching more than 20 times its trailing revenue, a historical high. Franchise-based models will trade at loftier top ratios than company-owned concepts. I don't like it. And so when you see something like this, I want to know, why are you telling me to buy this at such crazy valuation? Now, the quant has it as a hold. When you look at the Wall Street's price target is 3% down from where it's trading today. And you're not even at the all-time highs. The all-time high is $4.31, $4 or $5 on top of this. The valuation is crazy. We talked about Costco being crazy at 50 times earnings, forward earnings. This is 113 times forward earnings. Now, what I don't like about Motley Fool is they tell you to buy this stuff. Well, let's take a look at some of the others. El Polo Loco. This is a franchise operation as well. It's ranked number 1. Quant has it as a strong buy. When did they say it was a strong buy? Down here at 10, just back in June. It's at $13.79 right now. That's a nice 30% move just in a couple of months. That's a great buy. And their valuation is not crazy. You're paying 17 times earnings. Now, it's a smaller operation than Wingstop. This is a $412 million market cap. It's ranked number 1 out of 44 in the restaurants. If you want to rank them by market cap and you want something that's good, DoorDash right here has a 4. They're not making money. So it might be, let's see how expensive this one is. It might, but their growth is, 50 times earnings, but they're going to grow into it. Their PEG ratio, their forward PEG ratio is 0.78. It's under 1. That's why I don't like, and I'll include the screenshot that I took of what Motley Fool puts in. It was all fluff. There was nothing in there that said, oh my God, I've got to get into this stock. Now, I could be completely wrong. This could be an $800 stock by this time next year. I don't think so, but it could be. The market humbles everybody. Now, crypto. Let's talk about crypto. IBIT options were approved. This analyst, Stoney Chambers, believes there's a watershed moment for Bitcoin. They're saying buy. They're saying buy IBIT. Okay, there's no history on IBIT right there. I have said I own IBIT. I like IBIT. IBIT is brand new. It's a Bitcoin ETF. Buying here at 32. Right thing. September 10th at 32. I bought more. I think my average purchase price is somewhere around 34, 35. We're at 36.25. I bought a bunch of this. I like it. They're saying that the options market should push prices higher. The gamma squeezes and how this now affects Bitcoin's price on a rational expectations model. The approval of IBIT options cements Bitcoin as a major asset. I like that. I like the analysis. So go and read that. Now, Earnings Hub. There's a couple of earnings that I want to point out. First is Micron. Micron reports on Wednesday. And if you take a look at this, their revenue expected $7.63 billion. What they report last time, it was $6.67 billion. So they're expected to grow their revenue. Their earnings per share, $1.13. It was last time it was 51 cents. So they're expected to double their earnings. Now, this one going into earnings, Micron has seen a little bit of a bounce. You're seeing that nice little button hook that I talked about in the video this weekend. On Substack, if you just go to the video course, you're seeing a nice little button hook here. Algorithm got you in at 84. You're seeing that nice that you got confirmation. Your Bollinger Band cinched up. They're turning a little bit. Your RSI has moved all the way down from 28, and now you're at 60 right before earnings. What does that do? Well, last time it turned like this at around this price point on earnings, you went from 95 all the way up to 140. Are you going to see something like that now? You could. I'm not a huge fan of Micron, but I tell you, it's a strong buy in the quant. I'm not, full disclosure, I am not buying this. This analyst says load up. Okay. They say load up. They said hold here when it was at, on November 4th, and it was up 29% since then. You're seeing they said hold here. It was down 32%. Now he's saying, load up. You can read his analysis there. I'm not loading up. I have Micron exposure in an ETF, I'm sure, but I'm not loading up. The one that I do want is Costco. Now, when we look at Costco, their revenues this time, $79 billion. That will include the price increase, I believe. I'm not sure if it's in there or not, but their last time was $58 billion. Earnings per share, this time $5.08. They reported $3.78. I'd argue this isn't a retail trade. This is more of a membership trade. You can see their stock chart is just, it's crazy. I mean, over $900. I don't want to pay 50 times earnings for this one. If they do come back and they come back down to more reasonable levels, the PE is not going to come down to 10. It's not going to come down to 17 where the S&P trades at. It's not going to come down like that. It's going to come down maybe to about 30. Okay? I'm okay paying 30 for the growth that this one has. I'm not okay paying 50 when I can buy Walmart at what, 25? I can buy Walmart. Walmart's got Sam's Club. Walmart has groceries. They're actually triggering on all. They're taking on Amazon with their Walmart delivery. I like Walmart. I've added to Walmart. At $80, am I buying Walmart? I'm not trimming, but I really don't like paying that much for Walmart. But when you look at the valuation, it's 32 times forward earnings. They're triggering on all cylinders. It's really, really going well. What's the number one? It's Target. And what's Target's valuation? When you look at Target, this one poses a really good opportunity, 16. Again, the sector is trading at 17 and 18. Target, if you shop there, I think you should buy the stock here. When you look at Wall Street, what do they say about it? Wall Street has a $175 price target. That's 12% up. They haven't chased it up. 12% up. So I wanted to bring this up. This app, Stock Pick, is the app. You can Google it. I'll put a link to it in the newsletter. But this is it's a video. My girlfriend described it. They came to me and they said, hey, we want to partner with you. I decided not to partner with them. I didn't think that their app was ready for prime time. It's getting better. I do seem to like it. They gave me a premium, so I do use it. I'm not an affiliate. I'm not recommending that you go out and buy it. If this is something that you like, you can do it. It's very good. If you use TikTok for your stock purchase, like research, this is probably a better option, to be honest with you. But if you're using other tools on the internet, probably not a great option. It's a good summary. I don't know that I'd necessarily pay for it, but again, they came to me. I liked them. The team was great. I gave them some feedback. They implemented some of that feedback. There is this one, 3 stocks from Morningstar's chief revenue. And it was interesting because he recommended Verizon, Bed Bath & Beyond, and Exxon. And the one that shocked me was Bed Bath & Beyond, or Bath and Body Works, not Bed Bath & Beyond, Bath and Body Works. Okay, I always get those confused. And again, that's not a great branding message when somebody gets your name confused. But the algorithm got you in here at 27, and you're at 30 right now. They expect this one to go through a good holiday period. Now, they even point out, we don't know exactly what's going to go on here because the stock has not performed well at all. But they said they expect something big in the it's got a good holiday season. I mean, and by the way, the valuation is what they pointed out. They said it's trading at 9 on the PE, but they said that really doesn't matter. I'd say momentum's tough to break. And that again, I could be completely wrong on this, but I like this one. I thought I'd bring it up as a payback to those guys for giving me the premium. I really like them. So check it out in the App Store. I'll leave a link. Your trading career, and this is part of the education, and then we'll go into the social request. Trading career. This is exactly what everybody goes through, okay? While you're learning, you're saying, oh my God, let's go. And the kiss of death for somebody is to make like 400% on the first stock that they invest in like in a few days. That's the kiss of death. So let's go. And then you say, oh my God, I've lost on my last 5 trades, but I've only lost 100% of the 400% that I made. What's this shit? Then you think, oh my God, I made another 400%. I got this. And then all of a sudden you lose your entire account. No. That was 2022. This is 2020 when everybody thought they knew exactly what they were doing. 2021 comes about, a little bit tougher of a trading strategy. Then all of a sudden 22 starts and the beginning's pretty good. And you're like, yeah, I got this. I know we're going into a bull market because Tom Lee said. And then you lost everything in 2022. And now you're at mastery level. This time to get to mastery level, I've been doing 35 years. I don't think I'm even at a mastery level. So just understand, this is a tough thing. If you're not willing to put in this learning, again, this mastery level, you're never going to get here without the amount of learning that you need and without the experience. You're just never going to get there. Nobody's perfect. You're not going to win on 100% of these things. So I thought this graph was actually really, really good. So social request. This is from email Kate. Thank you for your in-depth analysis this week. Do you think APP is a long-term buy and hold? If so, when? Let me read his email. I remember you mentioned a few months back, but I didn't pull the trigger on it. I see the price target is roughly $145. But in your opinion, is it too late to get in since I didn't buy it under 100? Therefore, I may not see the 40% upside that it has last month. In conclusion, do you recommend I purchase share of APP at its current price and wait and see if it drops? Or would it be wise to just keep putting my money into winners or something else that's bullish? So here's my take on APP. APP has had a fantastic run-up. It's a fantastic business. It is also part of Alpha Pick's portfolio, and they picked it somewhere late last year. And I think it was around November of last year. So you can see, if you got in November of last year, here at 38, you're doing fantastic. Again, APP has just had a phenomenal run. It is expensive. So it's not like you're buying at the absolute bottom. The valuation we talked about, Costco having a 50 times. This is 27. Okay, it's not super expensive. It is expensive. The PEG ratio going forward is 0.84. That's under 1. So their growth should take care of it. What you have to worry about with this stock is when that growth actually starts coming down. As you get bigger, remember, so a company that has $100 in revenue, it's easy to go from 100 to 200 because all you got to do is double your current small base of customers. It's super easy. A company like Apple, that's $3 trillion with like $6 trillion of revenue. How are they getting to $12 trillion in revenue? That's the question. So a company like this, when you're looking at AppLovin, they have 3.9, their market cap is, let's see, $42 billion. Is it unheard of for them to get to $82 billion? No. When you look at Wall Street, they're saying the price target is 104. They have chased it up, and it since has gone just crazy, parabolic to 126. Kate, if I were you, I would do your research. Do you know what AppLovin does? Because not once did you mention what AppLovin does, okay? So it tells me maybe you don't know what AppLovin does. And this is part of what Alpha Picks gives you. It gives you the full overview of the company. And so you can decide, is it worth $145 for me to pay for a company that does this? Okay, that's the first step. The second step is what you want to do is you want to take a look at the charts. What's my strategy? Okay, I don't know that it's too late for you to get into it because I don't know what your strategy is. Look at this weekly chart. The stock at 113, it's all-time highs. It hasn't pulled back and tested it. So it's trading at the upper end of the Bollinger Bands. I'm not getting into it. I didn't get into it the first time I suggested. I didn't get into it when Alpha Pick said to get into it. So would I suggest you buy it? I would suggest you do your research. Is it too expensive? The PEG ratio certainly doesn't say. It's not a long-term, we don't have a lot of history going, but you're going seasonally into 2 week periods of October and November. And then you're getting into stronger months. But again, it's only 3 years. So you don't have a ton. So again, I would do your research, Kate. You didn't mention anything about it. So in my mind, if it's a trade it on the chart. Learn how to read the chart. And that's a very simple one. I mean, am I buying at the upper end of this Bollinger Band when the RSI on the 4 hour is at 86? The MACD looks to be crossing down? Hell no. I ain't buying it at 127 when it's doing that and you're starting to see a button hook. When the price level, if we pull this back to kind of, when it started trading in this range, I don't see a ton of price volume up here. And I see a big gap between 119 and 93. So if I'm going to trade it, I'm going to wait for that. And if it goes to 145, it does. But I'm going to look at opportunities that are a little bit more strong on the downside so that I can take advantage of the upside. So hopefully that makes sense, Cade. But again, since you didn't put in there, hey, the business has this amount of growth, the business is in this business, and I think this is going to take off. Since you didn't do that, I'm kind of assuming that it's trade. Jeremy, hi. This is from Facebook. Interested to hear your thoughts on Carnival Cruise Lines before earnings. Here's what I know about the cruise line. And again, I'm a tech investor. I know nothing about this. But look at that run. The algorithm got you in here at 1684 and you're at 1859 at the top of the Bollinger Bands. You're 9 days just starting to turn. What happened the last time we got up into this level? It went from 1859 all the way down to 14. And again, that was August's pullback. But I don't think that we're done with the volatility. I went over this. Now, I will tell you we can go over here and go to Carnival Cruise Lines. And we'll go to the Wall Street says it's a $22 stock. There's 28 analysts that cover it, and they, even the quant says it's a strong buy. They've chased this one down. It hasn't gone down a much, but they've chased it a little down. The valuation is a little bit stretched on this before we go to the quant and see when it is. Because, again, from a PE standpoint, their forward earnings, they should turn cash flow positive. The quant, they took out so much debt to stay afloat. Now, it's ranked number 1 in the quant. You can see here, it went from a strong buy at 1861. And you're trading at 1859, right at about the same place. Now, it's ranked number 1 in the cruise line industry. You know who Alpha Picks picked? Royal Caribbean. They still hold Royal Caribbean. Okay. And we can take a look at this because I think it was Royal Caribbean was somewhere in the neighborhood of, I think it was January or something. We're going to do year to date. Okay. We're just going to do year to date of these two. And let's take a look at it. Look at Royal Caribbean versus Carnival Cruise Lines. Carnival Cruise Lines year to date is up 2%. Royal Caribbean's up 35%. Which one do I like? You take a look at it, and we look, the valuation's a D on this one, but they're making money. Again, you're going to get a boost from Carnival when they actually announce that they're making money. I'm not a super fan of cruises. So overall, if you're Jeremy, my guidance, if you're going on a cruise on Carnival, buy the stock. If you're going on a cruise on Royal Caribbean, buy the stock. That's what I would say. But again, what's my thought on it? Trade it. Use the chart. The chart looks like it's a bit extended. Doesn't look like it's got, super, oh my God, it's got to run up into earnings. Looks like it could use a pullback. So, Davey P from Spotify. Morning, Gary. Once again, outstanding episode with jokes and human factor. I absolutely love the energy. Question you described perfectly as the guy in the rocking chair trying to make a bit more income. I've only been trading about 6 weeks using a Schwab account. Thanks again for touching on the monthly dividend ETF stocks. As I have in my inexperienced strategy, traded JEPQ, JEPI, BITO, QYLD in my portfolio. Am I wasting my time? I have a budget of $27K. The Alpha Pick sounds interesting. Alpha Picks, I would say you have to devote, it's $450, I think, for the year. I save you $50 off the normal price. I think, yeah. So it's normally $500. I save you $50, $449. I would say you have to make, let's see. What's 449 divided by 10,000?
449 divided by 10,000 is 0.0449.
You have to make 4.49% return in Alpha Picks just to cover the cost with a $10,000 portfolio. That's the way to think of these tools. If you've got 27K, are you going to take 10,000 of that and put it into Alpha Picks? I wouldn't. I'd rather put it into VOO, which has a far less, far less expense, and it's safer rather than putting into Alpha Picks. Again, that's just my thought. Yes, I want to overperform, and I think Alpha Pix does, but past performance doesn't guarantee future performance. And I'd rather you build up that core portfolio of ETFs and then trade, take $10,000 out, when you have $40,000 or $50,000 and put it in, because then it's not such a large percentage of your portfolio. So let's look at these. Let's take JEPQ. JEPQ is one. I think this is this is their income strategy. And so here's what I want to point out to you. You've done well. They're new. So we don't exactly know what they're going to do from a price standpoint. While the market has floundered, the Mag 7 has gone up. This one's gone up. And so if we just look at, let's look at JEPQ. This is what we'll do. We'll look at the comparison chart here in Seeking Alpha. JEPQ has a dividend of 9.32%. And if we go and look at that versus the S&P, we're going to select metrics. We want to look at total return because that includes the dividend. JEPQ returns 27% over 1 year. The S&P returns 29%. So, over 3 years, JEPQ 38%. But, again, you started late on that one. So let's take a look at select symbols. Let's look at another one, JEPI. JEPI we'll put in, and we'll look at do BITO. And this is, BITO is a Bitcoin. Yeah, Bitcoin strategy. I wouldn't invest in, I don't know if that's a spot one, or IBIT is the one that I do. This is the covered calls on the Qs. Let's take a look at 3 years. Again, most of these don't last 3 years, but the S&P is up 28%. JEPI is up 26%. QILD is up 14%. And that includes the freaking dividend. So, unless you need income, and if this is in your portfolio, unless you need income, to pay your rent, and you want to do that, I just think that when you're paying that much, your actual asset is going to go down. It's like REITs. And remember, I'm a tech investor who's invested in growth. So I'm not going to like these. I'm not going to like them. Don't let me sway you, but do a comparison and just understand these haven't been around for very long. So if you want income and you want to, put it in there, I think if you want to historically, just go VOO. I know nobody in my high net worth group that says that these are a great tool. That's just the way it is. From email, Brian, hey, I'm still a daily listener. Great work. Found some new toys for you on the leveraged ETFs. If you didn't know, I have a whole watch list on leveraged ETFs. And so you can go in here and we can do that. And essentially what you do is you just edit daily stock, the list. And there's the entire list. And I can put more in. MSTU. We have MSTZ. We have BTCL. We have BTCZ. We have NVDX, which I think I have. We have NVDO. We have TSLT. I have those. I think I have those. We're going to get rid of some of these, but again, I'll put it in the newsletter. But I think a lot of these are in there in that list. We can look at this. It's listed. Yeah, I had some of those because some of these are duplicates. But it's a whole list. MSTU. I had MSFU. So, NVDO doesn't look like it's a symbol. That one's not a symbol. So we're gonna remove NVDO from the list. But yeah, I've got this list I provided to you as part of your subscription through me. So it's a good list. And again, these are leveraged ETFs that are 3 times against a thing. So against a core position. So we're seeing some pullback in the market. I'm seeing some pretty big red here. Uber's up 2%, Taiwan Semi up 2%, Tesla's up 1%. Now from Spotfiy, hey Gary, market seems to be going crazy. I'm up quite a bit on Palantir. I know it's hard timing the market, but possibly looking to take some profits. Should I just ride the momentum? Palantir, I mean, what do you want me to say? Palantir is overvalued. It's down 3% today. The chart looks great until today. There were several days where it didn't look great. Algorithm got you out with an 8% gain. Algorithm still has you in. So Ryan, I don't know what your strategy is. Is it long-term or is it trading Palantir? I would suggest if you have some large profits, I would take some profits. I would absolutely take some profits because I don't think that we've fully retested this 25. We haven't pulled back. The all-time highs of this one are 40. I think if you pass the 40 mark, I think you go to 45. But again, that valuation and this run, I would be taking some profits because in my mind, I don't think Palantir is worth that amount of money. Now, I've made this mistake in the past with Tesla, where I traded Tesla in 2019. It kept running. So if you're asking a douche on the internet, should you take profits in something that you're up a lot on? The answer is yes. If you're asking yourself if you should take profits on something that's run up, that's you. So you said it perfectly. You can't time the market. So whether you take profits or not, that's not for me to say. But I think it's just foolish to not take some. If you're up 100%, look at how I played SMCI. I bought more at 1100, but it was completely. I think my 1050 is my high on SMCI, but that was with profits. So it wasn't like I'm taking my actual capital that I earned and putting it in there. It was with profits, and I'm fine. I think I'm still holding that one. It's a small position. But again, I rode the momentum up. I bought at the top. I didn't get rid of it, but I'm waiting for it to run up again, or I'm waiting for it to completely slide. Now, you could say SMCI has completely slid, but I'm in profits, and the actual valuation of this company isn't crazy. Again, the valuation of this company is far different than Palantir. And the chart is in a far different place than Palantir. So you have to understand that I don't know your objectives. I don't know your long-term thesis on this. Again, there's nothing in this that tells me that you're saying, hey, Palantir is a great company and I want to hold it forever. So in my mind, you'd be foolish not to take profits. Scans. We have a cross up here on a core portfolio, PanW, 342. 342, it got you in at yesterday. Got you in at 346 the other day. I would be a little bit careful here because long-term, when you take a look at a weekly chart, it's still a little bit expensive. It's not crazy. The RSI is at 55, but you're trading at the top of that Bollinger Band. RSI, the MACD is kind of resetting. It's still above its oscillator, but I'd be a little bit careful. But for long term, I'm fully in this one, and I still have it. I haven't sold any of it. Costco, we talked about Costco. Energy names, Sunoco is one that got a cross up here, and energy as a whole. I think energy, and I was talking to this with my my financial advisor at Fidelity yesterday. XLE, when you look at year to date on XLE, what's at the bottom? It's XLE year to date. It's the worst performing sector. Now, you look at 3 years, and it's by far the best performing sector. So energy is just one of those ones that you want to trade. Right now, I think energy at its low is doing pretty well. Occidental was up like 2%. It's up 1.4%. When you look at Exxon, they're up about 1%. The Sunoco looks like it's pulled back a little. You're trading on the bottom end here on the weekly. The MACD is below the oscillator. The RSI is in no man's land at 49. So again, you look at Sunoco here in Seeking Alpha, the quant. Let's see what it says. It says it's a strong buy. Momentum's not great. Just understand, momentum's not great. Down 3% on 3 months. Don't throw your money all into this one. But again, it's number one. It's ranked pretty well. And now, when did it go into a strong buy in the quant? Let's see. It went on a strong buy here at 53 or at 54. So it's had strong buy up here at 63, went down. Remember, this is just a calculation. Wall Street says it's a buy. Wall Street says the price target is 62. There's 7 analysts that cover this. They've chased it up. Hasn't brought it down since it came down. So I've got a lot of other scans in there. They'll be in the newsletter. Remember, you can get to all the links here on Daily Stock Pick, Linktree, linktr.ee/Daily Stock Pick. Trendspider, $53 a month. I give you a free 7-day trial off of Seeking Alpha Premium. And Alpha Picks, we went over Alpha Picks yesterday. If you have any questions on Alpha Picks, go and listen to yesterday's episode, the 23rd. because I go over 2 specific alpha picks. If you have any questions, I will be on tomorrow. Hit me up. Okay, take care. See you, bye. Okay. Now I got to look at your comments. HRZN. I don't know what this one is. I bet the market cap's under $1 billion though. Horizon Technology Finance. What interests you about this one? I mean, that's a upper left to bottom right chart. Not for me. Morning, Marco. AMR. What's AMR? You're up 7%. I don't know. Why is AMR up? There's no news in Seeking Alpha. $2 billion market cap on a what is it, a mining company, materials, steel company? I don't know. I have no idea. Greg. I think it's AMR. Yeah, it's a. Why is the camera not following me? I gotta get the camera to follow me. Oh, you mother effer. Why are you not following me now? I like the camera to follow me. Because when I go over here and look, you gotta see me. The quant is it's on Seeking Alpha. If you go and look at like this one, it's 5 factors: valuation, growth, profitability, momentum, and revisions. And it grades a stock from 1 to 5. So AMR is a 2.58. And why does it say it's a 2.58? Well, it's because of the growth, the momentum, and revisions on the earnings. So it rates stocks. Okay, 10:14. I am out of here. That was a long episode for me talking. So I'm gone. I got to go edit this together. I will talk to you guys tomorrow. Okay, say bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.